What's up, everybody? Jake from StratGeeks coming at you. It's been a while since I made a video. I was taking a break for a bit. Been crazy markets lately, eh? Check this out, though. I had some breakthroughs over the weekend. Let me just tell you. It's good stuff. Good stuff. Stuff that's so great that it's worth making a video. So that's what we're doing. So we'll get back to this screen. You might be wondering what this is. And we will get back to that in a moment. So there's your teaser. So let me show you what I've done over the weekend. And since the markets have been a little volatile as of the last month or so, since the beginning of the new presidency, I think it's really barely up for debate how crazy things have been, especially for us. We can tell real quick how odd or how quote-unquote normal a trading day is. Like, does it fit in with the average of what we've seen over the past year or even more than a year? So the average opening range before January 20th was probably like 300 ticks, and we rarely got above 525 tick opening range. Lately, for the last couple months, we've been going up and above 525 ticks many times, an unprecedented amount of times. And I've actually been following this opening range thing since before ORS was even coded. Since COVID, basically, is when I first came up with this whole opening range, split the opening range up into 4 sections or whatever, however many sections it might be, and make a trading system off of those range levels. So, I mean, we can see yesterday, in fact, it was 769 ticks, way above normal, and we've been getting these days a lot lately, so we can measure that. Yeah, call it 770 ticks or so. But what I want to talk about is what I've done since now we have the data now that we did not have. We have a lot of days that are over that 525. Before, we didn't really have, like, I want each template, no matter what, I want to have at least a 200 trade sample size in either 90 day, 180 day, or even more than that. But if I can get over a 200 trade sample size in a 90 or in a 180 day backtest, in this case, we're going to be doing a 180 day backtest. If I get over that 200 mark, I feel like that's a pretty darn good sample size. We're using the NASDAQ micro 1 minute, and each one of these 3 templates is indeed is over a 200 trade sample size. So I'm really protective now of the templates and ORS in general. We had some security stuff go down over the last couple months, and we learned some lessons. And I'm not going to be explaining exactly how these 3 templates operate in a public YouTube video anymore. That will come if you subscribe and with our one-on-one Zoom meeting, and then you'll get the best of the best templates, which are right now at this point these 3 templates. We have a small opening range template, and I'm not even going to explain what the opening ranges are, what the so this one is from X amount of ticks to X amount of ticks, smaller. This one here in the middle is X amount of ticks to X amount of ticks, medium size, we'll say. And this one over here is X amount to X amount in a larger size. So we have a small, medium, and large template now. And what that does is it gives us the ability to customize our settings based on the size of the opening range, because markets act differently. In my experience, markets tend to act differently based on how big that opening range is. And like I said, now that we have the data, this is a lot easier to do. So let's look at each one of these templates for 180 days individually. And let me just preface by saying that our backtesting, because we use limit orders to get in and limit orders to get out, whether it be a stop limit or a target limit and an entry limit, we never use market orders. We never use trailing stops or auto break-evens. Basically, what we have found is that if you're using market orders, auto trailing stops, or auto break-evens, the backtest in NinjaTrader will be wildly inaccurate. What we have found with ORS is that because we do not use auto trails and auto break-evens, we do have that option available, but because we do not, and we only use the limit orders, this backtesting is 95% accurate. So when we trade a day live, those trades will be plotted right at the end of the day. At the end of the day, we can turn the strategy off and turn it back on again in backtest mode, and we can compare the live trades to what the backtest of that particular day said would have occurred. And what we have found is that 95 out of 100 days, those trades match. And why is that so important to me? Because that's the only way that I'm going to be able to stick with my rules. I need to be able to trust that the backtest is 90, 95, something like that, % accurate. Otherwise, I'm going to want to touch things, want to move orders. To me, that's everything. It really is. I've traded and designed multiple strategies with market orders and auto trails and auto break-evens and been excited, only to find that after trading a couple days, not only is the strategy not as successful as I thought it was going to be, but it was more of, why don't those live trades match the backtest of that day? Like, it's one thing to get a new strategy growing, think it's going to be great, and then to have 2 or 3 lost days right off the bat. That seems like that happens so often. But it's a whole thing, another thing entirely, to be all excited about a new strategy that you've developed, and suddenly when you run it live, it doesn't match the backtest of that day. Just throw the whole thing out. Just throw it out. If the strategy, in my opinion, I'm going to harp on this for a second, but if that strategy uses market orders, auto trailing stops, or auto break even stops, NinjaTrader just can't handle it. It's not going to be accurate. So let's look at the historical results for 180 days of the small range template real quick here. Right click, strategy performance. I already have it loaded up with 180 days of data. So what's really cool about this is that we almost doubled our profits from the singular template that we're using. We almost doubled our profits and halved our freaking drawdown. This is the time to get into ORS. Shoot me a DM on Discord. I'll go into how to get a hold of me a little bit later in the video. So here is the small opening range template. So we got a $1,000 drawdown and $6,400 or so of profit. So let's get a calculator out and we'll add them up. We'll call it 6,400. All right. And your drawdown is 1,000, 58.31% win rate. And this is the template that you've probably seen. This is very similar to other videos. It's a 1-to-1 risk-reward ratio. I'm comfortable sharing that. So with a 1-to-1 risk-reward ratio, 58.31% win rate is actually pretty darn good. But look at the total number of trades, 307. That's a fine sample size as far as I'm concerned. Your average winner is 140. Your average loser is 140. So you can see that that's about a 1-to-1 in there. And it's about 180 days from September 19th to March 19th. Okay, so now let's go ahead and look at the medium. Right click, strategy performance, real-time historical. And for the medium, we have 240 trade sample size. This is better than a 1-to-1 risk-reward ratio. So 57% still actually not bad. But our risk reward ratio is nice and positive, we'll just say. It's better than a 1-to-1. And we're looking at what, 9150, 9170. So plus 9170. So now we're at 15. Before we were 6 months from I was running this the previous template when we just had the one last week. I think the whole 180 days was like 11,000 something, and we had a much higher drawdown. So we're still around that $1,000 drawdown, which is great. And then that screen that I showed you earlier at the beginning of the video, we're going to be able to put all three of these trade data sets into that software and make sure that the drawdown doesn't overlap in any weird ways and make it actually worse than what we're seeing here. But right now we're just totaling it up to get a basic idea of what the three templates together would be. So 15,570. And we're never using more than 4 micros in any of these templates. You can use less if you want the drawdown to be less. Each one of these templates, I'm not going to talk about exactly how many contracts each one of these templates is using. We'll just say that they can be reduced by half if you want to do that. So now let's take a look at let's close this, and let's take a look at the large opening range template. And we got that same $1,000 drawdown or so. And we're looking at 3679, so 3,700 or so. Oops, not that calculator. Plus 3680. So 19,250. That's pretty darn good. That's almost double what our template was before. And in celebration of this, we actually had to rebuild our whole website. It's now .ai. So in celebration of kind of our grand reopening, hold on a second, my dog's being crazy right now. And I don't edit these videos, you know. I don't know, I got a lot of feedback that people kind of like this stream of consciousness, just go for it type of video. I don't know. It's not, I don't like making those whole shiny, super edited just videos. No, just no. I'm a trader. That's what I do. I don't make videos. That's not my primary job, is not to make videos. Primary job is to trade and help people get set up with ORS. So 19,250, all three templates combined, right? So now let's take this data. So here's how you do it. So for each one of these templates, we go to trades, and then you right click anywhere in here and then export. So you do that for each template, 1, 2, 3, and then you upload it to this super cool thing called Trader Sync. So I've pre-done that, and looks like the number's a little bit off, but it's pretty darn close. So I think we had 19,250, this is 19,447. So with 800 trades, I'll call that within the margin of error. 806 total closed trades. That's a really nice sample size for 180 days. But look at this equity curve. And just keep in mind that this is 95% accurate to what the live would have been. Now, also keep in mind, let's do something else here. Let's grab the screenshot tool here. If I can get it to pop up. Here it comes. Hold on a sec. All right, here we go. Check it out. And do this. Let's capture this. Because I want to show you that even though this equity curve looks amazing, and it is amazing, we do have flat periods, and they should be noted, because this is when a lot of people give up. Look at this. Look at this drawdown right here. You know, a lot of people selling strategies, they might not want you to see this. I'm going to highlight it, because this is, if you can get through this and stick with the system, then you might actually have a chance of success. And it could be argued that this flat period's all the way to what? To here. Because we did cruise up a bit, right? To here. That should be a green candle. Come on. A green arrow. but then we went back down again. So this, I think this is like a 1400. The max drawdown was 1400. That actually might be over here. I'm not sure. But we can look at it here in a second. But yeah, I mean, you have this. Then you got this one. Then you got the, let's actually just keep them on there. So even though this combination template is, I mean, we already had something good, and now we're talking something really, really good. But we still have to be able to sit through these drawdowns. And for me, I can't sit through these flat periods of these drawdowns if I can't trust the backtest. And we've been looking at this thing for a year now. ORS has been in operation for a year. And day after day after day, we see that the backtest is accurate to the live. Now, that's no guarantee that future results are going to continue. There's no guarantee in that in trading. But the backtest does match the live most of the time, 95 out of 100 days. But if you quit here, then you don't get that. If you quit here or here, you don't get this. If you quit here, then you don't get that. So it's a big thing with psychology. It really is. Really, really, really is. But let's look at some more of these stats. So this is commissions included. A lot of people out there selling strats, they don't include commissions. Absolutely ridiculous. Absolutely ridiculous. This is without commissions here. What are some biggest profits? So this is cool to look at. Profit factor combined 1.43. So that means for every dollar, you're going to make $1.43, or you would have. It's historical results, of course. Your biggest loss, $350. That's not bad. Not bad. Not bad at all. And your biggest profit, $340. And now this is geared to max out a 50K prop firm account. Obviously, you can increase the amount of contracts on any of these templates. You can decrease the contracts by at least half. 1, 2, 3, yeah, 3, 4. Yeah, all of this can be reduced by half. Let's before we look at the rest of this stuff though, let's look at the drawdown. Super important here. I immediately go right here. This is where my eye goes. So all three templates combined, stacked up in how the dates would have occurred over that 180, 60 day, 120 day calendar day, trading day. So we'll call it 180 days, 6 months. Your max drawdown would have been $1,358, including commissions. So I call that maxed out for a 50K prop firm account. Most 50K prop firm accounts are right around a $2,500 drawdown, trailing drawdown. So I wouldn't trade more. I mean, I guess you could. You could have some accounts if you're on evals, you know, or say you have 20 PA accounts, maybe you half this. If you half the amount of contracts, then your drawdown's going to be, you know, half that. So $1,400, $700 drawdown with, and then you just divide that. Oh, come on. Then you just divide this commissions included return here, a 19, call it 8, 9, 50 or 9, I don't know, close to $10,000 times 20 accounts though. I mean, come on. So if you were maxing out 20 50K accounts, you're looking at, 19,447 times 20, $388,000, $389,000 almost in 6 months. But even if you reduced your drawdown to like half all the contracts that I just showed, it would be what, 19,447 divided by half the amount of contracts. So now your drawdown's only going to be would have been only about 700 something bucks. And now maybe you feel safer trading all 20 accounts, and you're still looking at 20 accounts. And a lot of us do have 20 accounts. You're still looking at almost $200,000 in 6 months. say you only had 10 accounts. That's still, what, 9723? 9723. This is with half the amount of contracts times 10 accounts. It's still $97,000 in 6 months with these 3 templates combined. So pretty darn good stuff. Pretty darn good stuff. Let's see, what else do we got here? This is really important to me, the biggest loss and the biggest profit. I don't want to see, I would really rather not lose more than, and it's going to be rare that you lose that. I'm not going to get into explaining the intricacies of each one of these templates in this video, but we'll just say that this is going to be a rare thing that happens. What else is good? You can always pause it here if you want to look at any more of this stuff. Average daily P&L, $186. That's pretty nice right there. A lot of people shoot for around $200 per day on average. So I like to see this for sure. Let's look at the number of trades. 800 trades. 800 trades. Max consecutive wins is 11. Max consecutive losses is 8. So, you know, don't be surprised if you see loss, 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 loss. It's happened before, and it could happen again. But also don't be surprised if you see win, 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 win all in a row. That has happened before. I also like to look at the hold time. The average total hold time, 18 minutes. That's a solid trade, you know. A lot of prop firms, this ain't no high frequency trading. This is a solid trading strategy with real rules. And, you know, definitely go look at some more of my videos. And actually, let me show you a great video. I'm going to drag this in here. This video right here. Truth about automated trading psychology. This one. This one, I explained what is basically the small template, how ORS takes its trades, like ad nauseum. I think I do, I don't know, 5 longs and 5 shorts. I don't know. Enough trades where you're absolutely going to be able to understand how and why the system takes its trades. We don't hide the ball when it comes to how the system takes its trades. And let's see what else here. Total commissions, not hiding that. Performance, standard deviation. Oh yeah, let's look at the calendar. This is really cool. This to me, this really helps my psychology be ready for what can be nasty weeks. So I love how this system, how this program here, TraderSync, plots the calendar out like this. You can see now this is with the maxed out for the 50K account contracts. You could always divide this in half and reduce your risk if you want. See here for the week, we started. So this is 180 days. This is why we're at the 19th here. So those 2 days, and then look at this, green, 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 5 days in a row. Don't expect that every week, but it happened to be $900, 30 trades. And then the next, so this will carry over here, 30th. So here's the 30th. So $149 loss on a Monday. And then green, 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 green. Almost a $2,000 week. Green, 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 $1,500 week. Half green, half red. This might have been a holiday. I don't know, for some reason. Or it could have been over the opening range allowance here. And then we got win-win, loss-loss. What I really want to do is I want to find some red weeks. Still all green weeks. So if there's ever a gap, it's because the opening range was either too small or too big or a holiday. So you can see the holidays here, the day before Christmas and Christmas Day, and then the first. Yeah, I mean, this was a lost week, lost day, lost day, lost day. Oh no, I want to quit. Win day, $1,000 loss that week. You know. Another good weeks, another good month. Here's another lost week. $400 down after this week. So like I actually like to concentrate on these. I want to be ready. and know that they're going to happen. But then look at how insane this next week was. You just never know. You just never really know. And I mean, yeah, so the last 2 days, down 250, down 350, 602. But who knows what today will bring? The 19th is going to be tomorrow. So just want to show you guys what's going on with that stuff. And then, oh wow, look at that. I think I might actually make a video that's not an hour long. Wow. Good job. Good job, Jake. Let's do this. Let's bring this back in here. There's me. I'm living in Bali right now. I'm a black belt in Hapkido. Just a little bit about myself before we end the video. This picture I took of myself a little while ago in Bali. Just got this super cool little dog here, Marshall. I'm a paragliding pilot. Anybody out there fly paragliders? Anybody want to come visit me in Bali? Come on, let's go. Let's go. This is me flying in Nusa Dua in Bali. I don't need to go through all of this. Psychological challenges of automated trading. But yeah, the fear of not trusting your own backtest. This is what I want to get to. We only use limit orders. No auto trails. No auto break evens. But I've already talked about this a bunch. I don't need to talk about it anymore. I'm trying to make this video quick. Let's go. All right, I do want to stop on this. So what's cool about StratGeeks, our company, is that we limit our subscribers. And the subscribers that we do have, we all like to help each other. So whenever somebody new comes in and has questions, you join the VIP members chat on our Discord server. And if I'm not awake, because I tend to go to sleep, because I'm in Bali, I'm in the opposite side of the world, and I can't answer a question if I'm not awake, then somebody else in the members chat will probably be able to answer your question. So it's kind of like joining a team. Actually, it is joining a team, I guess, in a sense. So we have a discount going on for ORS. But I really want to be able to make sure I get in contact with you, so because a lot of times people have questions and whatnot. So if you could DM me via Discord first, I'll send you the 50% off for the first month. Oh, hold on a second. Got alarms going off. That alarm is actually an alarm for a setup meeting for a new subscriber that we have. I got a meeting with him in a half hour. And yeah, every single new subscriber, because we're a small company, we limit our subscribers. Every single new subscriber I meet with personally for an hour, over an hour oftentimes, and make sure that everything's set up for them perfectly. Answer any questions on a Zoom meeting, screen share, I take mouse control, set stuff up for them if they want. Oftentimes, that's what I do. So go to StratGeeks.ai. I want you to get in contact with me so I can send you the discount code so we can get on like more of a one-on-one personal basis, because people have individual questions sometimes before they sign up, and you can message me via Discord. And this is kind of a way to make sure that we get connected before you just go to the site and use the discount code. And I don't even know who you are. I'm like, oh, who is this person? Anyway, it just makes sense. So go to StratGeeks.ai. Right here, StratGeeks.ai. Click on the link up here where it says Discord. And I don't know if it's going to work because I'm already a member of my own Discord server, obviously. Yes. All right. It does work. Excellent. So you can accept the invite there. Then you join our Discord server. And on Discord, find me. Just go ahead and send me a friend request. I'm Jake at ORS. Make sure it looks exactly like this. Jake_at_ORS. You see a little picture of me. Make sure it's me in my picture. And then I'll send you the discount code. And with that discount code, to get not only, actually should have made this 50% off the old. Okay, so you're going to get 50% off of your first month's membership. But better than that, you get 50% off the old pricing. So we increased our pricing, I don't know, a couple months ago or something, but because we rebuilt our websites, kind of like a re-grand opening thing, we decreased our pricing back to the previous pricing, and we're going to keep it like that for a little while. So with the discount code that I'll send you via Discord, you'll be able to get 50% off that first month, but then you'll also be able to lock in that old pricing for the lifetime of your current, however long you stay subscribed. The price will never, ever, ever increase on you as long as you keep your subscription active. So I didn't think we were going to do this. We weren't going to revert to the old pricing, but this just seemed like the right thing to do as a grand reopening kind of thing. So send me a message via Discord after signing up with our Discord. So you get locked into the old pricing for the lifetime subscription. Prices will never increase. They might increase for people who have never signed up, but we'll never send you an email saying, hey, by the way, thanks for being a loyal subscriber to ORS for the past 4 months. Your prices are increasing 15%. Like, dude, it just seems so wrong. So wrong to be able to do something like that to people. And then we're actually, I didn't have my coffee before. Hold on a sec. All right. Where was I? I just wanted to correct the spelling here on Pulse. So we are in the process of developing a brand new strategy. We haven't released any other strategies besides ORS in the whole year that we've been in business. But I figured out a way to not use market orders anymore for runner type strategies. So with this strategy, it should be done hopefully this week. You basically enter on a long signal, say, to go long. You enter on a long signal. You'll hold that trade, and as soon as the signal reverses and puts in a short signal, the old way of doing it would be you market order to get out. I figured out a way finally, I don't know, it just freaking came to me, I don't know, 2-3 weeks ago, to use a sell stop or a buy stop as like a phantom trail stop that just shows up when that signal. Anyway, it's a little complicated, but I got high hopes for this next strategy, and it's not based off the opening range or anything. It's more of a classic style strategy, but the main claim to fame here is that it's not going to use market orders. So there's a high probability that our backtesting is going to be very accurate with this new strategy. So if you send me the DM on Discord, you'll get 50% off the old pricing, locked into the old 50% off the old pricing for the first month. Then you got locked into the old pricing for the lifetime of your subscription. Prices will never increase. Plus, you'll get a 14-day active license of our new strategy Pulse once it's released. And we limit our subscriber base, so you don't have to really worry as much of like, oh no, what if too many people are using these templates and everything? Like, you basically can't even get these 3 master templates until you sign an NDA. And that's not just for protection for myself and Eamon, my business partner. That's protection for our current subscribers. It's a pretty rock solid NDA to get these most current templates. And then, yeah, after you do that, then we'll set up a one-on-one Zoom training, and you can basically just book that through the calendar link. Anyway, just wanted to show you all that. See if I can keep the video here under, look at that, definitely under an hour. And if you got any value out of this video, or if you enjoyed it, please send a, I never do this. Please like this video, share, and subscribe. I literally never even say that. So look at that. Maybe I'm becoming a YouTuber, but again, I'm not a YouTuber. I happen to make YouTube videos, but what I really like doing is trading and helping people get better psychologically with their trading. I've had a lot of people come to me and just, I mean, if anything, ORS can really help with psychology. So I just love helping people. I like running this business. I love trading. I don't mind making YouTube videos. Like, share, subscribe, all that stuff. What else is I going to say before the end here? I think that's pretty much it. Yeah, I think we talked about it all. All right, folks. Shoot me a DM on Discord. You know what to do. Jake, signing out.